Welcome to Counterarts. In this lesson, we're going to be looking at asset disposal. We're specifically going to look at how to do the asset disposal using journal entries. Now, we've done asset disposal lessons before, but on those lessons, we looked at how to do the asset disposal using the T account or the general ledger account. So if you've been following us for some time, you may have seen those lessons at some point. But here we are specifically going to do so using journal entries, as many students have been requesting. And it's important to mention asset disposal and asset realization is exactly the same thing. So if I'm going to be using these terms interchangeably, just know that I'm talking about the same thing. So if in your material you see asset realization as opposed to asset disposal, it's just the same thing. Asset disposal or asset realization is basically getting rid or the removal of an asset from the entity's books. So that is the exercise that you are going about doing. You are removing the specific asset from your books because you've gotten rid of the physical asset. And we'll explain just now what we mean by getting rid of an asset. When an asset is disposed of, it must be removed from the books. The disposal is recorded in the fixed assets register. So if you've done the fixed assets register or you've seen it before, or the PPE note, you will know that there is a line item called disposal, and that is you getting rid of the asset from your books. So that is what we are doing here when we do the journal entries relating to asset disposal. If the asset is sold or traded in, the profit or loss on disposal, if any, must be calculated and disclosed as an income. That is, if you've made a profit on the disposal, or expense if you've made a loss on the disposal. So what we are saying here is that if you are selling these assets, then you are probably going to make either a profit or a loss on the disposal. So you must recognize either the profit or the loss. But you may also not make the profit or loss. You might sell the asset at carrying value. We've seen one of our other lessons on asset disposal. On the T account, we did an example where we sold an asset at carrying value, where you've made neither a profit nor a loss. So in that case, you won't have the profit or loss to disclose. But usually you would have sold the asset for a higher amount than the carrying value or a lower amount than the carrying value. In that case, if it's a higher amount than the carrying value, you've made a profit. If it's a lower amount that you sold the asset for than the carrying value, then you would have made a loss, and you'll have to also recognize the loss. And we'll show you how to do this using journal entries. Okay, so what do we mean by asset disposal? When do you dispose of an asset? How do you dispose of an asset? Well, an asset may be disposed of in a number of ways. Well, here is a popular one. The most common way of disposing of an asset is by selling it. So if an entity sells the asset, that means we have to also remove it from our books because the company has just disposed of the asset. But you may also dispose of it by trading it in as part payment for a new asset. So for example, if you are going to buy a new vehicle, you might take your old vehicle and trade it in, give it to them, and they'll give you a value for the old vehicle, and by that value they will be deducting it off the amount that you owe for the new vehicle. So it's a part payment for the new vehicle. So that is another way you'll be disposing of the asset. You may dispose of it by scrapping it. So if there are no expected future economic benefits from a particular asset, then you may consider scrapping it because it's of no value to the entity. So once you've scrapped the asset and you've just disposed of it, you need to do the entries for it. Another way of disposing of an asset is by donating it. So a company might decide to donate an asset or a vehicle, for instance, to an organization. So by doing so, then you'll have to record the disposal on the specific asset that you've just donated. Another one is the owner may take the asset for his or her personal use. All right, so one of the owners, or it might be given to a director, if they take it for their personal use permanently and not using it for business purposes, then we'll have to remove it from our books because it's no longer an asset for us because we've just gotten rid of it. So if any of these things happen to the asset, then you know you've just disposed of an asset, then you have to follow the asset disposal process. Now, you may be asked to do the asset disposal using journal entries, then this is the particular lesson you should be following. But if you're asked to do the asset disposal using the general ledger account or the T account, then you'll find the links to those lessons I alluded to earlier in the description below. So when you dispose of an asset, what steps do you follow when you're doing the journal entries for the disposal? Well, it's very important to understand the steps, and it's also important to know what you do in each particular step. So once you've known what the steps are, then it's easy to know what you need to do when you're asked to do the journal entry with regard to asset disposal. So let's look at the steps that you follow when doing the asset disposal. The first step is to record the depreciation of the disposed asset from the beginning of the financial period to the date of sale. unless the asset was sold at the beginning of the financial period. Now, we'll go through an example just now, but scenarios might be different in many different examples. But these steps are very key. You will follow them regardless of the information that you're given. But here we are saying that you need to know what the depreciation is from the beginning of this particular financial period until the date of disposal. So let's say that our financial period began on the 1st of March 2022, and we're just selling this asset on the 31st of October 2022. Then we need to calculate the depreciation from the 1st of March 2022 to the 31st of October 2022, and then we'll have to record that as depreciation because that's an expense for the company. All right, so what we are saying is that you need to record the depreciation for the disposed asset from the beginning to the date of sale. But if you sold the asset at the beginning of the financial period, so if our period started on the 1st of March 2022, and that's the date at which you sold your asset, then obviously we have no depreciation for this particular asset for this financial period. So you will note that step 1 will not have to follow, all right? That's if you sold the asset at the beginning of the period. But what is the journal entry if we sold the asset after the beginning of the financial period? Well, here's the journal entry. You will debit depreciation and you will credit accumulated depreciation. And obviously the narration there is the depreciation calculation for disposed asset. All right, if you don't know how to do journal entries, if you don't know why we are debiting depreciation, why we are crediting accumulated depreciation, we'll put the links to those lessons where we explain how journal entries work, why we are debiting depreciation, which is an expense, why we credit accumulated depreciation, which is a negative asset account. If you don't understand those and in many aspects related to depreciation, accumulated depreciation, you'll find the links to the lessons in the description below. But here we're just going to run through the journal entries. Okay, so now you know what you need to do for the first one. So you calculate depreciation from the beginning of the period until the date of sale, and then you do this journal entry: depreciation debit, accumulated depreciation credit, and you put that particular depreciation amount there. Okay, what is the second step? Well, you transfer the cost price of the disposed asset to the asset disposal account. This is the easiest journal entry that you can do. Okay, so you look at that disposed asset. We just sold an asset during this financial period. Let's say we sold it on the 31st of October 2022. We've just sold the asset. Then we ask ourselves, this asset that we just sold, how much did we buy it for? Well, you'll usually be given that amount. You would not necessarily have to calculate it. I've not seen a situation where you have to calculate the cost of the asset, all right, unless they want you to work backwards through depreciation to get the cost of the asset. But it's the easiest journal entry because you'll usually be given the cost of the asset, how much you bought it for initially. Okay, it doesn't matter how far back you bought it. If you bought it 5 years ago, 4 years ago, 3 years ago, or even in this particular financial period, it doesn't matter. You just put the cost of the asset. So what is the journal entry? Well, it's quite easy to do this. You debit asset disposal and then you credit the asset. All right, so I put you credit asset there because the asset might be equipment, it might be vehicle, it might be furniture, it might be a building. So whatever that asset is, you put the name of that asset. If it was equipment, then you would debit asset disposal and credit equipment. But just know that you credit the asset. Why? Because asset is debited when it's coming in, but when it's going out, it's credited. And remember, asset disposal, we're disposing of the asset that's going out, so we have to put it on the credit side to remove it from our books. And the narration there is removing the asset from the entity's records. All right? Quite easy to do that one. And as I said, you put the amount at which you bought the asset for. All right? So you'll put the amount on the debit and the credit side. Okay, so step 2 is quite easy. No calculations that you usually have to do here. Step 3, transfer the accumulated depreciation of the disposed asset to the asset disposal account. Very important. You're taking the whole accumulated depreciation account. All right, so you must be able to understand the difference between depreciation and accumulated depreciation for you to be able to understand why we are doing what we are doing here. Remember, accumulated depreciation is all the depreciation for this particular asset from the date that you bought the asset until the date of the sale. Very important. You get that wrong, you'll get the answer wrong. Not only until the beginning of this financial period, which is a common mistake that is usually made by students. Okay, so here's the journal entry that you'll do: debit accumulated depreciation and credit asset disposal account. And that's the amount that you'll put there. The full depreciation of this particular asset from the date you bought it until the date at which you are disposing this particular asset. Okay, and the narration I put there is transfer of accumulated depreciation to the asset realization or asset disposal account. Okay, so I hope that has made sense. Remember, usually you'll be given accumulated depreciation from the date you bought the asset until the beginning of this financial period. And remember, step one, what we had to do, we had to calculate depreciation from the beginning of the financial period until the date of sale. So usually you would have to add together the accumulated depreciation at the beginning of the financial period and the accumulated depreciation for this particular period, and that will form part of the full accumulated depreciation of this particular asset from the date of purchase to the date of sale. We are going to go through an example and you'll understand what we've just mentioned here. But I hope it's making sense what I've just explained, all right? And your debit and your credit, you can't mix them up, all right? So you make sure that you're debiting the right account and crediting the right account, all right? So let's do the fourth step, all right? The second last step. Remember, there are 5 steps here. Record the proceeds on disposing of the asset. Again, this is a very easy journal entry to do. What do I mean by proceeds? Well, I mean how much you got for this asset. If you sold the asset, how much did we get for the asset? If you sold it for 20,000 rand, then that is the proceeds, all right? And if you sold it for 20,000 rand cash, then that comes into our bank account, so we'll debit the bank account. So here's the journal entry that we would do. We debit bank, that's if it's a cash sale, and then you credit asset disposal. All right, but you can see I've got other items here on the debit. So if you debit bank, that means you sold it for cash. So if you sold the asset for cash, you'll debit bank. But if you sold it on credit, so if they told you that you sold the asset on credit, then you will debit debtors control. Or if you traded in this particular asset, then you will debit creditors control. Why are we debiting creditors control? Well, because we are reducing the liability. Remember, when we trade in, we now have a liability to pay the full cost price of this asset that we are buying, the new asset that we are buying. So by debiting creditors control, that means we've just reduced how much we owe the car dealership, whoever is selling us this new asset, if it's a vehicle, for example. All right. And if you're selling on credit, you debit debtors control, because debtors control is for people who owe you money. So that's if you sold it on credit. All right. But remember, the credit side stays the same as asset disposal. So it doesn't matter how you sold it, you will always credit asset disposal in this particular step. But the debit is dependent on how you are disposing of this asset. I hope that has made sense, but you'll see the example just now. The narration here is proceeds from disposal of asset. Remember, your narration might be different from mine, or you might see a different example to mine, but as long as you're speaking to what is happening in that particular journal entry, all right? Otherwise, if you're explaining something different, that's when you get it wrong. But usually narrations might be different, but as long as you're speaking to the same thing, you should be fine. Okay, so if you do not know about these journal entries, like I said, you'll find the link on journal entries in the description below. Okay, let's do the last one, number 5, step 5. Record the profit or loss on the disposal of the asset. So here you might have disposed of this asset. Remember that profit is dependent on how much you sold it for versus the carrying value of this particular asset. If you sold it for higher than the carrying value of the asset, that's a profit. If you sold it for less than the carrying value of the asset, that's a loss. Always remember that, but you have to record the profit or loss on disposal, because profit on disposal is an income, loss on disposal is an expense. So you have to recognize that as well. But I've already explained that in our very first slide. So here's the journal entry if you made a profit. You debit asset disposal and you credit profit on disposal of asset. Remember, profit on disposal is an income, so income is credited. Okay, and the narration here is recognition of profit on disposal of asset. Okay, what if you made a loss? What would you do? Well, it should be easy. You would debit loss on disposal of asset and credit asset disposal. And here the narration is recognition of loss on disposal of asset. So how would you know whether it's a profit or loss? Well, you'll have to do the calculation to determine whether you made a profit or loss, and then do this last step. So these are the 5 steps that you'd follow when doing asset disposal using journal entries. All right, so if you follow these 5 steps, you should be fine. Now let's go through an example and see how we do these 5 steps, all right, with actual numbers. Here is the example that we'll be going through. Villa Cargo sold furniture for 29,500 rand cash on the 1st of October 2022. So what you're already doing here is highlighting what you're seeing, and what's important is the date, is the amount at which you sold the asset for, and how you sold it. We are told we sold it for cash here. Remember, one of the steps that I mentioned there, we have to take into account how we sold it. That will depend on what we put on the debit side of the journal entry for recording the proceeds. The furniture sold was bought for 60,000 rand. Remember how much we bought the asset for. Remember recording the cost price of the asset. That is step 2. So we've already been given that amount here, and had an accumulated depreciation of 27,000 Rand on the 1st of March 2022. Why are we told 1st of March 2022? Well, let's keep reading. Furniture is depreciated at 15% per annum on a straight line basis. So we know we'll have to calculate depreciation on the first step. So we needed that information. The financial year end is 28 February 2023. Now, if our financial year end is 28 February 2023, that means it must begin on the 1st of March 2022. So we know when the beginning of our financial period is. That is why I was asking, why would they give us this information 1st of March 2022? Well, that is why, because we know when this accumulated depreciation was for. All right, so that means we'll have to calculate depreciation anyway in the first step from the beginning of the financial period. When did it begin? 1st of March 2022 to the date of sale, 1st of October 2022. As I mentioned, that's what we do in the first step. Prepare the entries in the general journal to record the disposal of the asset on the 1st of October 2022. Okay, so here's the first step. Record depreciation on the disposed asset from the beginning of the financial period, i.e. the 1st of March 2022 to the date of sale, which is the 1st of October 2022, unless the asset was sold at the beginning of the financial period. So we know for a fact this asset was not sold at the beginning of the financial period. If that were the case, we would have been told it was sold on the 1st of March 2022. But that's not the case, so we'll still have to calculate our depreciation. What is our journal entry going to look like? Well, remember this: we debit depreciation and we credit accumulated depreciation. Our narration there is depreciation calculation for disposed asset. In this case, you would actually be specific to say for disposed furniture. All right. So what is our debit going to be and our credit? What's the amount there? Well, let's calculate the depreciation. We're using the straight line method here. If you do not know how to calculate depreciation with the method that we are given, either straight line or diminishing balance, we've done a lesson on that as well. You'll find it in the links in the description below. But since we are using the straight line method, we're going to take the cost of the asset, which we are told here furniture sold was bought for 60,000 Rand. That is the cost of the asset, and we multiply that by the depreciation percentage, which is 15%. That's because we're using the straight line method. We still have to multiply that by the number of months divided by 12. Okay, so we are using the straight line method. We're taking the 60,000 Rand times 15%, but we have to multiply that by the number of months from the beginning of the financial period until the date of sale, and we divide that by 12. So how many months do we have from the beginning of the financial period, which is the 1st of March 2022, to the date of sale? How many months are those? Well, pause the video and try and calculate it. It should be easy. Well, let's see. 1st of March, so we're going to count March, April, May, June, July, August, September, and we don't count October because we sold it on the 1st of October, so we didn't go through the month of October. Okay, so if we sold it at the end of October, then we would have counted October, but we don't count October. So if you counted from the 1st of March to the end of September or the 1st of October, those are 7 months. Okay, so what is our calculation? 60,000 Rand times 15% times 7 divided by 12, and that will give us our depreciation amount. So here it is 5,250 Rand. So that is the first step. We calculated the depreciation and now we put it in our journal entry, and then we should be done with the first step. I hope that has made sense. All right, if anything doesn't make sense, then you should probably look at our depreciation calculation examples in the lesson I alluded to, and you should be able to know how to do that calculation. So 5,250, we put that into our journal entry, and I must mention here that accumulated depreciation, you can see that I've added furniture in front of accumulated depreciation, because with accumulated depreciation you have to specify to which specific asset is it relating to. So is this furniture, is this machinery, is this vehicle, is this building? So that is why whenever you put accumulated depreciation in any journal entry, you have to put the name of the asset it relates to. And in this specific example, we're dealing with furniture. Okay, so we're debiting that depreciation, crediting accumulated depreciation on furniture, and then the narration depreciation calculation for the disposed asset. Okay, so that was easy enough. Let's move on to step number 2. We're told here to transfer the cost price of the disposed asset to the asset realization account. By the way, I forgot to mention that when you are doing these steps, a better thing for you to do is to pause the video here, attempt to do all the steps from step 1 to step 5 on your own, and once you're done, you can continue the video and gauge your understanding. The reason you're doing that is to see how much you've understood what we've been going through so far. Otherwise, you can continue to watch until the end, but it won't be of much value as it would be if you were to attempt the question before watching it all the way through. Okay, so the second one is quite easy for us to do because we're given the cost price. What is the cost price of the furniture that was sold, well, it's 60,000 rand. That's quite easy to identify from the information. So you should be able to see it on your own as well. So now that we have the cost price, what are we going to do? Well, one thing we know for certain is that we're going to credit the furniture. Why is that? Because we initially debited it when we brought it in, but now that we're taking it out, we're crediting it, and then we'll debit the asset disposal. So here's how it's going to look. Debit asset disposal, 60,000 rand. Credit furniture, 60,000 rand. Narration, removing the asset at its cost from the entity's records. Quite easy to do the second one. If anything, this should be the one that you get correctly. All right, let's look at the third step. What are we supposed to do here? Well, we are transferring the accumulated depreciation of the disposed asset to the asset disposal account. Now, as I mentioned earlier, accumulated depreciation is a negative asset account, so it usually goes to the credit side. All right, but now that we are clearing it out, want to remove it from our books, we are putting it on the debit side. So as you saw earlier on, we debit accumulated depreciation and credit asset disposal. All right, again with accumulated depreciation, indicate what you're dealing with. Here we are dealing with furniture. That is why we indicated it. All right, so what is the amount that we're going to put here? Well, remember, we're given the accumulated depreciation as at the 1st of March 2022, which is the beginning of this financial period, but we have to include the depreciation from the beginning of the financial period to the date of sale, because that forms part of accumulated depreciation for this particular asset. All right, so we're going to take the 27,000 rand plus the 5,250 that we had calculated in step 1. Okay, very important. So here's how it's going to look. 27,000 plus the 5,250 gives us 32,250, and that is what we're going to put into our journal entry for step 3. Okay, here's a question. What if we sold this furniture on the 1st of March 2022, i.e. at the beginning of the financial period? Well, if we did, our accumulated depreciation would be the 27,000 rand, all right, because we are given the accumulated depreciation at that point, at the beginning of the financial period. You may have been given, or you may be given, accumulated depreciation at the date of sale. If you are given, then that means you will just use that amount that you're given. But we were not given the accumulated depreciation at the date of sale. That's why we had to calculate depreciation from the beginning of the period to the date of sale, and now we add that to the accumulated depreciation at the beginning of the period. All right, so we put 32,250 there. I hope it's made sense as I've been explaining. If it doesn't, then you can go back and see the theory that I explained earlier on, or rewatch this step. Okay, so let's look at step number 4. Step 4 says record the proceeds on disposing of the asset. So that's what we are doing. Very easy to do this one as well. We're just seeing how much do we receive for this particular asset, and that's what we're recording. All right, and usually if you received cash, like I mentioned, you debit bank. All right, otherwise you know that asset disposal will be credited for step 4 regardless of what the proceeds were or how you received the proceeds, as I explained earlier on. So how did we receive the proceeds? Well, we are told here that the Villa Cargo sold furniture for 29,500 rand cash on the 1st of October 2022. That means we received cash. That is our proceeds, 29,500 rand. So we're going to debit bank 29,500 rand because this is cash, and we're going to credit asset disposal. And that's how it's going to look. And the narration there is proceeds from disposal of asset. That was quite easy to do, and it's always going to be easy because you'll be given what the proceeds is. All right, whether you traded it in, whether you sold it on credit, or whether you sold it on cash, you will know what to do based on the theory that we've gone through. But here you sold it on cash. This is how you record the journal entry. Let's look at the last one. Number 5, record the profit or loss on the disposal of the asset. So again, you have to see, is this a profit on disposal or is this a loss on disposal? If we got more money than the carrying value of the asset, that means it's a profit on disposal. If we got less money than the carrying value of the asset, that means it's a loss on disposal. So let's look at the theory that we went through earlier on. Remember, if it's a profit on disposal, we debit asset disposal and we credit profit on disposal of asset. And if it's a loss on disposal, we will debit loss on disposal of asset and credit asset disposal. So the first thing that we need to do is to calculate the carrying value of this particular asset at the date of sale. All right, we want the carrying value at that date when we sold it. All right, and we want to compare that to the proceeds that we received. So how do we calculate the carrying value? Well, we'll take the cost of the asset, i.e. how much you bought it for, minus the accumulated depreciation at the date of sale. Very, very important. It must be the accumulated depreciation at the date of sale, not the accumulated depreciation at the beginning of the period, the 27,000 rand, unless we sold it at the beginning of the period. Okay, so what is the cost price of the asset? Well, it's 60,000 rand. And what is the accumulated depreciation at the date of sale? Well, we did that in step number 3. All right, so you want to check that out. It's 27,000 rand plus the depreciation we calculated in step number 1, 5,250, and it gave us 32,250 for the accumulated depreciation at the date of sale. So we'll take the 60,000 rand cost of the asset minus the accumulated depreciation at the date of sale, 32,250, and it gives us a carrying value of 27,750 rand. Once you have the carrying value, you may not have needed to calculate it. Maybe you were given the carrying value at the date of sale. So you just need to compare that carrying value to the proceeds, okay? So our asset was worth 27,750 rand at the date of sale, but we sold it for 29,500 rand. So we got a higher amount than what it was worth. So that makes it a profit on disposal of asset. So that's as easy as it is. Comparing the carrying value to the proceeds, and you are able to determine whether it's a loss or profit on disposal. So here's a note to remember, as I've just explained. The profit or loss equals to the proceeds minus the carrying value of the particular asset. So if you use this formula, proceeds minus carrying value, if it gives you a positive, you know it's a profit. If it gives you a negative, then you know it's a loss. Okay, so proceeds 29,500 rand minus the carrying value 27,750, and that gives us 1,750 rand, and it's a positive. So we made a profit on disposal of the asset. But it's obvious when you see the numbers, all right? You sold it for more than it was worth, as I've just mentioned. So that's how you do this particular step. So what is our journal entry? We debit asset disposal and we credit profit on disposal of asset. Why are we crediting profit on disposal of asset? Because profit on disposal is an income and we credit our income. So here is how it's going to look. Debit asset disposal and credit profit on disposal of asset 1,750 rand. The narration, recognition of profit on disposal of asset. That is how you do asset disposal using journal entries. I hope you attempted it on your own, and if you did and you compared it to ours and if you got it correctly, then you know that you have understood how to do the asset disposal using journal entries. Now, if you have not checked out our lesson on asset disposal using the ledgers or using the T account, you will find it in the link in the description below. Otherwise, if you've gained value from this lesson, you've learned something, consider subscribing to our channel, like this video, and share it to those you think it might help. Till next time, cheers.